Okay, over the last couple of weeks, we studied about gross profit. Okay, we started the lesson financial statements of a business, and we studied about the revenue and then cost of sales and then finally the gross profit. Okay, so we learned about sales revenue, as I said, and then we learned about purchases, and then we learned about the gross profit, and we also did some questions from that, and we did activity, and now we are moving on to net profit. So before beginning today's class, I will briefly explain you what is gross profit. Okay, so we have gross profit. Okay, now gross profit is revenue minus cost of sales. Okay, this is what gross profit is. Now when it comes to revenue, there are two items in it. Okay, revenue can be one thing cash revenue. Okay, one thing cash revenue, and the next part could be sorry, in revenue it could be cash sales. Okay, it could be cash sales, okay, or as credit sales. Okay, so when it comes to revenue, there are two components that could be cash sales or credit sales. Then we learned about the cost of sales component. Okay, then we learned about the cost of sales component. Now cost of sales, we learned cost of sales is equal to opening stock. Okay, opening stock plus purchases. And then we learned these purchases could be cash purchases or credit purchases. Okay, it could be cash purchases or credit purchases. Again, අපි අත්පිට මුදල් සල්ලි දීලා ගත්ත purchases එහෙම නැත්නම් ණයට කරපු මිලදී ගැනීම. එතකොට purchases වල තියෙන්න පුළුවන් cash purchases or credit purchases. Okay, then we had some other expenses like carriage inwards. Okay, sometimes packing fee. We had all these things. Okay, we had all these things. Out of this, what we do at the end is we will deduct the closing stock. Okay, we will deduct the closing stock. Okay, then we will get what we call then this entire component is called the cost of sales. Okay, cost of sales. So when we deduct cost of sales from revenue, we will get gross profit. Okay, when we deduct cost of sales from revenue, we will get the gross profit. Okay, so we did a question around this theory area. Okay, we did an activity, we did in class exercise, and then we did a activity as well. And today we will be moving on to net profit. Okay, we are moving on to net profit. So today we will be learning about net profit. Okay. Okay. So when the gross profit is calculated, the net profit or loss should be also calculated. Okay. So when we calculate gross profit, okay, when we calculate gross profit, then what we have to do is we will have to calculate then net profit. Okay. The details of the accounting elements, income, expenses that are used in the details of the accounting elements, income and expenses that are used in preparing the profit or loss statement are given below. Okay, so what are the things? Income is we already learned about this. Income is increasing in equity other than the introduction of capital. by the owners is known as the income. Okay. Then all other income earned not included in the gross profit is regarded as other income. Okay. Now what is happening? Now initially we learned about the gross profit. Okay. Now we are going to learn about net profit. When we are going to calculate net profit, we need to know about something called other income. Okay. We need to know something called other income. So all other income earned not included in the gross profit is regarded as the other income. Some examples for other income include the following: the interest earned by depositing the excess cash, the rental income, and then dividend income, and then discounts received, commission income, etc. In calculating the relevant net profit or loss of a business organization, all the above income should be considered. Okay. So then we are being given an activity. The income, the income and the cost of sales relating to a business of a given accounting period are given below. Cash sales, credit sales, cost of sales, dividend income, rental income, discounts received, and interest income. Calculate the gross profit or loss of the business and total of the other income generated. Okay. Okay. So let me brief you what we studied just now. Okay. So as I said, now first, okay, we learned about gross profit. Okay. Then today we are going to learn about something called net profit. Okay. We are going to learn about net profit. So when we are going to calculate the net profit, there is something that we need to calculate before, which is called other income. Okay. Other income. Now, as we know, since we need to know what is other income, we need to understand what is income. So income is increasing in equity other than introduction by the owners. Okay. Other income is any other income which is not considered in the calculation of the gross profit. Other income is any other income not used in calculating gross profit. Okay. That is what other income is. So what are the incomes that we sort of like used in calculating gross profit? That is the sales. Okay. And sales include two sales components, which are cash sales. Okay, which are cash sales and credit sales. So in simple terms, any revenue or any income other than cash sales and credit sales usually fall onto this other income. Okay. So based on this content, we are going to try out a activity. Okay. Calculation of net profit. Okay. So the income and the cost of sales relating to a business for a given accounting period are given below. So they have been given here. And we have to calculate the gross profit and the gross loss of the business and the total other income generated. So before trying out this question, let's first write down the note. You can write a subheading called calculation of net profit. Okay. Calculation of net profit. Okay. Write the subheading calculation of net profit. And then you can write two slides which have been given here. Okay. Two slides given here. This slide and this slide. Okay. These two slides. I will increase the size. Okay. So you will have to write these two slides. Write the subheading as calculation of net profit and then start writing this, and then we will move on to the activity. Okay. Okay, students, let's try out this question. Okay. So the income and the cost of sales relating to a business for a given accounting period are given below. Cash sales, credit sales, then cost of sales, dividend income, rental income, discounts received, and interest income. So they're asking calculate the gross profit or loss of the business and total other income generated. Okay, so they're asking two things. Okay, so let's start with calculating the gross profit. Okay, so first we have to calculate the revenue. Okay, when we calculate revenue, we have cash revenue, or else we have cash sales, which is 70,000. Then we have credit sales, which is 48,000. So this will net on to revenue, which is 118,000. Am I correct? It's correct. Then we have the cost of sales. Now, unlike our previous questions, okay, we have been straight away given the cost of sales here. Okay, cost of sales, which is 52,000. 52,000. And now we have to calculate the gross profit. Okay, which is 66,000. Okay, 118,000 minus 52,000. 118,000 minus 52,000 is equal to 66,000. Okay, so this is the gross profit. Now, with this will be over, and then we have been asked the total other income. Okay, total other income. So total other income will add up to what? Total other income is all the other income other than usage for the calculation of gross profit. So we didn't use dividend income. Dividend income. It's a other income. Why? We did not use it for the calculation of gross profit. Then we have the rent income. Okay, rent income. Then we have discount received. Discount received. Then we have interest income. Okay, so those are the things we have. So dividend income is how much? 5,000. Then we have rent income of 30,000. Then we have a discount received of 6,000 and interest income of 7,000. Okay, so those are the other incomes. So we can add them up. Okay, 5,000, 30,000, 6,000 and 7,000, which will be 48,000. So the total of the other income, okay, total of the other income will be how much? 48,000. Total of the other income is 48,000. So with that, we will be concluding that question, and we will move on to the next slide to learn about what? Other expenses. Okay. So let's move on to the next slide. Okay, so far what happened was we first learn about gross profit. Okay, then we are going to calculate the net profit. And in calculating net profit, we need to know about something called other income. Okay, and this other income we have learned. Now we are going to learn about other expenses. Okay, this is what we are going to learn now. So initially we learned about gross profit and its calculation. And from the gross profit, we are turning to net profit as the next step. So in calculating net profit, we need to know about two things: other income, which we have already learned and did exercise, And now we are going to learn about other expenses. Okay, so expenses. The other important element shown in the profit and loss account are the expenses. The decrease in equity other than drawings of the owner are regarded as expenses. එතකොට අපි expenses කියලා කියන්නේ මොකක්ද? Decreasing in equity other than drawings of the owner are regarded as expenses. So what are these other expenses? What are these other expenses? These include other expenses. So examples include insurance payments, okay, insurance payments, rental payments, okay, salaries to employees, depreciation of fixed asset, depreciation of fixed asset, bad debt. Okay, these are the other expenses. So these other expenses, okay, these other expenses, they are categorized as what? They're categorized into 4 categories. Okay, distribution expenses, then admin expenses, then other expenses, and finally financial expenses. Okay, so we first learn about gross profit, and then we are moving on to the net profit. In net profit calculation, we have 2 things to be learned. First one is other income. The second one is other expenses. So we already learned about other income, and now we are learning about this other income. So the examples for the other income include insurance payments, rental payments, salaries of employees, depreciation of fixed asset, and bad debt. And all these items, okay, all these items, they are being categorized. They are being categorized into 4 categories. Okay, distribution expenses, admin expenses, other expenses, and financial expenses. Okay, so we will be learning about these categories in next few slides. We will be learning about distribution expenses, then administration expenses, then other expenses, and then financial expenses. Okay, and then we will put them into a sort of like categorization. Okay, so we can take a couple of minutes and write these 2 slides. Okay, you can write these 2 slides, this slide and this slide. Okay, you can write them in points. Take a couple of minutes and write them. Okay, so now we are going to learn about the categories of these expenses, distribution and financial expenses category. Okay, so firstly we are going to learn about administration expenses. Okay, so we are learning about other expenses. So first we are going to learn about administration expenses. Expenses incurred for administration purposes of the businesses are categorized widely as administration expenses. So examples include rent payment, insurance payment, stationery, depreciation for building, repairs, electricity, and depreciation of equipment. එතකොට අපි business එකක, now when we are running a business, there are some expenses that need to be incurred for the purpose of administration. Those expenses we categorize as administration expenses. So what are the examples? Rent payment. Okay, what are the examples? Rent payment. Okay, then insurance payment, then stationery. Okay, then depreciation of building. Okay, depreciation of building. It's particular. Okay, depreciation of building. Then repair expenses, then electricity expenses, then depreciation of equipment. Okay. So those are the administration expenses. Then we are going to learn about other expenses. Okay. So then we are going to learn about other expenses. Okay. So this is administration expenses. And then we have distribution expenses. Okay, distribution expenses. So distribution expenses are the expenses incurred for selling and distribution of trading business is categorized as distribution expenses. So this is for what? Selling and distribution of a trading business. Two things, selling and distribution. Okay, these includes expenses incurred to sell the inventories, to promote the sales and carriage outwards. Okay, so what are the examples for these? The examples for these expenses include advertising expenses. Okay, advertising expenses, then salaries to sales employees. Okay, salaries to sales employees, and then bad debts. Okay, depreciation of day, then vehicles, sales, then sales commissions paid. Those are the distribution expenses. Advertising expenses of the sales staff, that distribution of day and vehicles, and then sales commission paid. So those are the distribution expenses. Okay. Then we will be moving on to learn about the other expenses. Other expenses. Okay. So other expenses and losses that were not classified under above categories are categorized under other expenses. Let's say there are some expenses which cannot be categorized under administration. Okay, administration and distribution. Okay, they cannot be categorized under these. Then the option is what? Other expenses. Okay. So what are the examples? Losses from cash flows. Losses from cash flows. Now, something like this, it cannot be categorized for either administration or distribution. So you have to categorize it under other expenses. Okay, losses from fire. Okay, those are other expenses. Okay, so we learned about three things now. Administration expenses. Administration expenses are the expenses that has to be incurred when you are administrating your business organization. So what are the example? Rent, insurance, stationery, depreciation of building, repairs, electricity, and depreciation of equipment. We learned about distribution expenses. Distribution expenses are the expenses that has to be incurred when you are doing the selling and distribution of a trading business. Okay, selling and distribution of a trading business. So what are the examples for the distribution expenses? Advertising expenses, sales, salary, staff expenses, then bad debts, vehicles, and sales commission paid. And then we move on to another expenses category, which is other expenses. So other expenses are any expenses that cannot be put for administration and distribution expenses. They will fall under other expenses category. Okay, so what are the examples? Losses from cash flows, losses from fire. So those are the examples for other expenses. And finally, we are going to learn about another category called financial expenses. Okay, this is the fourth category. Okay, this is the fourth category. Okay, so this being third, this actually we are learning this in the first one. Okay, but let's name second. Okay, likewise. So expenses incurred in a business for origination for borrowing funds and maintenance of bank accounts are known as financial expenses. So if you are borrowing, okay, you are taking loans, borrowing of funds, and you also have bank account maintenance fees. So those are the financial examples. Okay, so what are the those are the key categories or what is inside a financial expense. So what are the examples? What are the examples? Examples include interest for bank loan. Okay, interest for overdraft. Okay, then bank charges. Okay, so those are the examples for financial expenses: interest for bank loan, interest for OD, and bank charges. So we learned about 4 categories of expenses. Okay, actually, first one should be distribution expenses, which are incurred in the selling and distribution of a trading business. Examples include advertising expenses, salaries of the sales staff, bad debt, depreciation, and then vehicle and sales commission paid. And then administration expenses are the expenses that you are incurring when you are administering the organization or the business. So the typical examples would be rent, insurance, stationery, depreciation of building, repairs, electricity payments, and then depreciation of equipments. And then we have the other expenses. Let's say your expenses do not fall into the category of administration expenses or distribution expenses, then you will have to go to other expenses, losses from cash roads, losses from fire, etc. And then we will be moving on to the financial expenses, the last expenses category, the expenses that has to be incurred when you're borrowing funds or when you're maintaining bank accounts. So typical examples would be interest paid for bank loan, interest paid for OD, and bank charges. Okay, so those are the 4 categories of other expenses. So these will be important in calculating the net profit and calculating the net profit in a statement. So you can see here, see, now these expenses are categorized into different categories. Distribution expenses are there, then administrating expenses are there, other expenses, and financial expenses. Okay, so let's take a couple of minutes and let's write down the note. Okay. Okay, you can take a couple of minutes and start writing the note. So firstly, you will have to write about the distribution expenses. That is the first one. Okay, first write about the distribution expenses. You can write this slide, distribution expenses. Okay, then you can write this slide, administration expenses. Okay, then you can write this slide, other expenses. And finally, financial expenses. Okay, this slide, financial expenses. Okay, okay, then take a couple of minutes and write this down.